You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody. That music means it is time once again for the Crypto Rundown, the program here on the old Options Insider Radio Network, where we dive deep onto the crypto side of the fence, talk some Bitcoin, some ETH, the spot, the futures, the options, of course, the volume, the volatility, the skew, the OI changes, all that good stuff, and a whole bunch more. My name is Mark Longo from theoptionsinsider.com, as well as, of course, in the aforementioned network, reminding you, if you like what you hear, not just for the Crypto Rundown, but for everything we do here on the network, leave those reviews wherever you get our programming so new folks can continue to discover this content. It's particularly important for this program because we've seen such an influx of new people, typically new to the options world, discovering this program. It's always been fascinating to see what they're interested in, what other shows they listen to. So keep that influx coming wherever you listen to this program. Keep those reviews coming so new folks can discover the show. Of course, keep those questions coming too. We do love to hear from you guys. And let's see who we're hearing from today on the old program. I'm pleased to say we are joined once again by an old friend of the program, even though he hasn't been on in a little while, Mr. Bill ULIVIERI, the principal over there at CENACLE Capital Management. Mr. Bill, welcome back to the Crypto Rundown program.
It's great to be, Mark. It's just wonderful to be part of the crypto community once again.
Bill, I'm looking here at my notes here. It shows, I know you haven't been on in a while, but you actually, your last appearance was on a bit of an inauspicious day, March 9th. We all know pretty much what was going on in the world then, and shortly thereafter we saw the great nadir in the markets. We saw that extreme amount of volatility in the crypto space, Bitcoin selling off 30-odd% intraday at one point. So a lot has unfolded in the world and in the marketplace since the last time you were on. Let's just start there. Catch our audience up. How have you been doing in the family? And indeed, how have you been faring in these topsy-turvy equity and indeed crypto market times, sir?
Well, Mark, thanks for asking. Honestly, I think we've never done a better job with our client accounts. I think, that floor trading experience helps me do a great job on the extremes. So when the market is overbought or whether it's oversold, it seems that, being on a trading floor, you can't panic. I mean, you just have to take it 1 minute at a time. So we did really good for our client accounts. We had a high cash position going from September until March, and then we just bought all the way down. So that worked out really well. In addition to the cryptocurrency side, I mean, really, we saw Bitcoin decline not all that much unlike the Russell 2000 or some of the other indexes. So really, the correlations all go to one during a market panic, and we believe that that's exactly what happened in Bitcoin. And now we're seeing the Dow at new highs, S&P 500 at new highs, QQQ, I'm not sure if we're at new highs right there. And again, we're close to getting to the all-time high in Bitcoin without a $4 trillion stimulus package. So I find it really interesting what's going on.
Very interesting indeed. Funny you should mention correlation. We have a listener question about that a little bit later. But first, we have to head right on into the Bitcoin breakdown.
It's time to explore the latest trading activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show where we break down the price action, all the other fun stuff going on in the world's leading digital asset. Of course, we're talking about the big dog, Bitcoin. And you know, if you've been out there on the Bitcoin bull side of the fence, I know a lot of you have been. Well, this has been yet another good week for you guys out there. Coming into showtime, we see Bitcoin north of 16,800 out there. So, what another week it has been, as we've seen aggressive rallies in the broad equity space and a lot of other markets post-election and indeed post-news of the vaccine out there. We've seen Bitcoin following suit, which is kind of interesting, gives some interesting maybe fuel to the fire of folks who say it's an uncorrelated asset out there. Again, we'll get to that a little bit later in the show. But come into showtime, it was up almost exactly 1,500 handles from our last show, 1,502. To be precise. So quite the run out there for the Bitcoin bulls. You know, we were joking on the show earlier what interesting strikes were dominating the tape out there and how things like 16,000, even 20,000 were out there. And they seem kind of outlandish. And yet here we are blowing through that 16,000 strike. I'm not sure if the 36,000 strike makes a lot of sense to me yet, but that one still open and still for size out there. So a lot to parse. A lot of people out there on the technical space have been talking about Bitcoin blowing back, different technical barriers blowing back 2019's, blowing past, I should say, 2019's peak price out there. That certainly is a signal for momentum for a lot of folks out there. So a lot of things to parse, a lot of things to analyze. Let's start there, Mr. Bill. A lot of movement in the biggest digital asset out there. What's been lighting up your tape and what's been catching your eye out there in the realm of Bitcoin this week and indeed in this just ever turbulent period post-election, sir?
Well, you know, what I see on my screen is the Grayscale Bitcoin Investment Trust, or Grayscale Investments, which is, you know, one of the few ways you can invest in getting an allocation to Bitcoin in an IRA or a 401k, say through your traditional broker-dealer like TD Ameritrade, Fidelity, Schwab, et cetera. I find that their company, they're gaining more and more assets under management. I read an article the other day where they actually own about 62% of all the Bitcoin that is available, you know, in the public domain. And I see that their activity and the acceptance of Bitcoin as a digital asset is increasing as time goes on. And I think for me, the most exciting development was just a few weeks ago where PayPal announced that it would begin accepting payments in digital currency. Now, PayPal has over 26 million merchant accounts. They have 345 million users globally on their platform. And you'll be able to soon buy, hold, and sell Bitcoin on that particular platform. And also, the company stated that they will be accepting Ethereum, Litecoin, Bitcoin Cash will also be supported on their platform sometime in 2021. So again, I find it very, very exciting news, especially again from adoption. And even I think when we spoke, I'm not sure if Paul Tudor Jones, who is a legendary Wall Street investor, wrote a white paper called The Great Monetary Inflation. And he believes that Bitcoin, in addition to gold, and probably actually better than gold, is going to be a alternative asset that has a tremendous amount of value because it's not it's not a part of our normal systemic asset classes and securities that we have out there. So he sees this light coming at the end of the tunnel, and it's not deflation. We have 17 trillion of negative interest rate bonds, which are mathematically impossible to make money. Yet we have trillions of dollars being held in pensions and sovereign wealth funds, holding by the banks. And so they say that a bottom is a process and a top is something that takes years sometimes to put in place. And so the fixed income market, again, is a little bit scary. And we're seeing more and more of respected asset managers, longtime asset managers, embracing digital assets, especially Bitcoin.
It's funny you should mention Paul Tudor Jones. A lot of folks have pointed to him as perhaps the culprit, the big whale that suddenly kind of popped in there on the CME Bitcoin futures and really started driving up some volume. We have seen a little bit of a commensurate turnaround there for a little while there, and the options are a little bit lighter out there again right now, but we did see a little bit of some aggressive action out there in the CME contracts. What do you think, Bill? You think it was him or maybe indeed his white paper that turned some large asset managers onto the crypto derivatives world in ever larger numbers, sir?
These type of asset classes, especially the distrust of Bitcoin and its former reputation as being something that's only used on the dark web, and the Silk Road and all these nefarious money laundering and drug drug transactions. Okay, so yes, that's true. But also, the U.S. dollar is still the global reserve currency, and the U.S. dollar is the currency of crime along the globe. So it isn't like, just the perspective is changing, the conversation is changing. And yes, I think that those whales in the Bitcoin world, on the CME futures, more and more traditional asset managers are saying, where do I go? Where do I park assets? I see what's going on, and there's no place to go. And the more we get people with a great reputation to expand their idea of, say, a 2 to a 5% allocation to digital assets, the greater its reputation and price is going to go. And we're even seeing greater acceptance by people who were traditionally negative on cryptocurrency, because central banks around the globe are creating their own digital asset. And someday the U.S. dollar will have its own digital currency. And it'll be very similar to what we see right now. So again, I think it's an exciting time to be alive in this space. And we're still, I wouldn't say there were new adoptions, right? We're not early adopters, but I think the majority is beginning to move into this space. And really, we don't know. We don't know how high it's going to go. People think Bitcoin can go to $300,000, $300,000 per token by the end of 2021. I'm a little skeptical on that number, but there are still the wild claims that it could be $1 million a token. And then there's people who think it's going out worthless. So we have this great extreme in belief system, Mark.
That's what makes a fun market, right, Bill? You got people on both sides willing
That's
to
what
trade.
Makes it two-sided market. Yep.
I'm still don't know. We talked earlier on the show a couple weeks ago about someone loading up, Bill, on the January 36,000 strike out there in the Bitcoin options. I'm not sure if I'm on board with that aggressive of a short-term move. You can tell us now, Bill. It's just me and you talking here. Was that you? Was that CENACLE on the 36,000 strike?
No, those are the risk managers asking their clients to cover their upside risk, right? It's just a risk issue. I don't think anybody really thinks it's going to go there. But when you're short at the money volatility, or you're short these units all over the place, you have to be able to cap your wings in order to keep, your cash that you have to deposit, for risk purposes at the clearing firm, something reasonable. We always used to see that, right? In the SPX pit. That's why there was always this little bit of a bump in the upside out of the money calls. No trader would buy, a 75-cent option or a $1.50 option and sell futures against that, because the skew was so steep. The S&P would rally and rally and rally. Your calls would go nowhere, and you'd get annihilated by being short futures contracts. So I'm sure these people were taking these options, buying them for risk purposes, and then extracting them out of the position just so that they didn't trade their future contracts against the calls that they had to buy for risk. That's my guess.
Certainly makes a lot of sense given what we've seen out there, because the notion of someone just out there straight up buying those always seemed crazy. But again, we've seen crazy things afoot out there in the crypto space these days. You're talking about Skew and some of the vol, Bill. Let's get to that out there. Realized vol out there in Bitcoin going back 30 days. Remember, realized vol, listeners, is how much volatility has been exhibited in the marketplace, in this case, over the past 30 days. That's ticked up ever so slightly. It was pretty high last time, 56%. It's still pretty high, about 58% right now. So still hovering close to that 60% range. Now let's go forward a little bit and let's see what the market is predicting for the volatility in the next 30 or so days out there. That's actually come down a little bit. It was 58% on our last show, and it has ticked down to 54%. Now, we have seen, obviously, some movement out there in Bitcoin since our last show, so that may be a little bit surprising. Well, it's moving. Why is the vol coming down? But we said it before, that level of close to 60% is hard for any major asset class to maintain a roughly 60% volatility for any given amount of time. You have to have a lot of movement, really, to maintain that. So Bitcoin obviously still volatile, but just coming off a little bit, only about 4% since our last show. The Skew has swung markedly, though, since our last show. The Skew was about minus 9.3% on our last show. It's pretty much double to the dark side there, minus 18.4% out there. It's interesting stuff. If you want to dig into all the action with the Skew, you can, of course, go over to skew.com. That's where we get all this data from. Also, the folks over there at Genesis Volatility have some great breakdowns of what's going on the Skew, who's buying what, and they break it down in the nearer term, the first 30 days, and they go out farther, longer term as well. So they break down the Skew based on the term structure of what you're looking at. So that makes it pretty interesting as well. Going on out to what's been lighting it up from an options perspective. OI, pretty strong. Not surprising given just the massive uptick we've seen in general underlying levels. Doesn't surprise me that we've seen a commensurate uptick in overall trading action and indeed open interest. Now, let's get to the trading action first. We talk about open interest because we talked on our last show. There was that just huge day, right? The November 5th, 751 million. That was just an enormous amount of paper going up that day in terms of notional volume being traded over there on the biggest dog out there, the big outlet, which is DEREBIT. We didn't quite see those numbers this week, but we saw consistently very high levels, multiple days around the 450 million notional level, which is previously one of the highest we'd seen. Back on October 21st, that was our high, 459. And now we hit that about 3 days in a row this week, coming in close to 4. So a very active week throughout the week. It wasn't just one big blip out there on the radar. In terms of where that paper is lining up, let's look at the venues out there first, going back to the open interest. And it has surged quite a bit, closing in on close to $4 billion across most of the major venues out there before it kind of retreated a little bit over the course of the past week. So we're at a little bit north of 3. Looks like about closing in about 3.25, 3.3 billion out there. The big dog out there in terms of OI, still DEREBIT. It hit itself a max of about 3 billion exactly over the course of the past week. It has come off that a little bit now. It's about 2.7 billion still. A ridiculous amount of OI out there, however you want to parse it. That's clearly number one out there. They have about 79% of the open interest right now. Then number 2 is CME with about 9%. They have about 293 million worth of notional out there. Their high is almost 400 million, 389. So obviously they're coming off that a little bit as well. Then we got a tie for third place with Bit.com and OKEX. Bit.com has 175 million, OKEX 154 million. So obviously OKEX a little bit lower there. Bit.com also has a much higher high, 243 million versus 166 million for OKEX. So Bit.com fighting their way firmly into number 3. LedgerX taking up the rear there at about 2% with about 80 million worth of notional outstanding. Unfortunately, BAKKT still at a 0 out there. No options trading to speak of. Let's see what was trading out here this week. We saw some big prints on DEREBIT back on the 12th. 15,000 puts were the order of the day out there. Some of the larger prints we saw, a couple of 400 lots going up on the 12th, back when Bitcoin was about 16,300, and we saw them going up for 0.016 Bitcoin each in both 400 lots, so total about 800 going up within the span of a few minutes of each other. Again, that level, maybe not entirely surprising, given the fact that we have surged north of 16,000, threatening 17,000 coming into showtime. We might see a little bit of interest, a little bit of hedging to the downside. We don't have a side on that, so we don't know if they were hedging or indeed coming in to harvest a little bit of the old risk premium, but not exactly surprising that some of the larger prints we saw out here over the past week. We're on the put side. Looking at today, it's calls all the time. About 700 of the Nove 18,000 calls were the most active contract out there on DEREBIT today. So looking a little bit to the upside. Bill, any of this come across your radar or maybe surprise you? Anything in terms of the skew or the volume or the volatility of the OI or anything else we've seen out there in Bitcoin options land over the past week, sir, really catch your eye?
Honestly, Mark, my firm is trying to cross this chasm between being a traditional investment advisor, a state-registered advisor, using our all plain Jane exchange-traded funds, but then trying to add that mix to, again, IRAs and 401ks that comprise most of my business. I love options. I was, as you know, I was in the options business for 30-some years, a floor trader, as we would say, chomping at the same a bit with you, side by side on the trading floor. But really, the option space, for me, I deal so much with retail investors that are still trying to make the mental leap as to whether Bitcoin is a Ponzi scheme or a legitimate investment. So I don't focus a lot on the options volume, but I say as I sit here listening to you talk about these notional values of what's going up, the sheer volume of these numbers, I'm shaking my head. Like, who are these people? Where do these firms come from? I'm kind of laughing because, again, I see a lot of content on Twitter and in my Facebook, not my Facebook feed, but in Twitter feed, where the distributed finance, digital finance, DeFi is becoming more and more popular, and these type of exchanges that are strictly dedicated to trading and managing digital assets they're gaining momentum. Compared from a year ago, I find it exciting and amazing and very new. And I think that's what just brings so much excitement with me and you to this environment, because we're really seeing a new evolution in these products. And I just love listening to you talk about this, because I can I see a little bit more excitement and it's something new. I see, I can tell it in your voice. This is, these market caps on these exchanges are just, I'm surprising. They're surprising and exciting all at the same time.
Now, speaking of market cap, someone just tweeting out here an article by Bloomberg analyst saying $1 trillion in market cap is now the next big resistance for Bitcoin. So there we go, Bill. The big whales and optimists are still afoot out there. $1 trillion.
We got pretty close. A few years ago.
I don't think we're quite there yet, but that would be an impressive level. Maybe that would be is that the fault line there where we get north of $1 trillion? Okay, it's not a Ponzi scheme anymore. I don't know. I don't know where that fault line lies, but it certainly is interesting to analyze. Let's look really quickly where the volume is lining up here across the months. We've said it before. We'll say it again. Crypto options traders love a quarterly. That seems to be where they like to hang their hats for whatever reason. Even though right now it does seem like Nove is in the lead with about 54,000 contracts open. So that's the big dog out there. That's the end of month Nove. Actually, the weeklies in Nove expiring on the 20th are also doing some pretty decent paper, about 26,400 open there. So I guess if you add all of Nove together, you're talking about 80,000 contracts. That's a pretty impressive size. And then you got DEES, number 2 with about 47,300. That's looks like there's a couple of DEES contracts there as well. So if you add those together, you get, looks like about almost closing in on 60,000. So DEES is catching up, but not quite there. Of course, a lot of this Nove is going to come off the board by the time we do our next show. So I'm not sure if DEES will catch it by then, but DEES clearly going to be moving into the driver's seat. You see March also with 29,200, and then Jan, of course, we know why Jan is up there, because of those aforementioned 36,000 calls out there in Jan. That's still why 36,000 is the number one size strike in terms of open interest out there right now, with nearly 20,000 contracts open. It dwarfs everything else here on the chart. The next most active is 16,000, which is a now in the money strike. How crazy is that to say out loud? With almost 16,000 contracts open, about 15,600. Followed by number 3, we got the 20,000 strike with about 15,200. Then everything else kind of falls off from there. We got about 18,000 strike with 13,300 open, and 13,000 even open on the 14,000 strike. That's not confusing at all. So, yeah, it still is dominated by upside, in particular, very far upside for overall options volume out there. We talked about CME earlier, and Paul Tudor Jones maybe turning on some whales to that. I saw some decent prints out there over the course of the past week, including that big day on the 12th. That was kind of the high for CME as well. About 29 million worth of notional options paper going up out there. I hate parsing notional. That's still, unfortunately, the lingua franca of the crypto space out there right now. So that was kind of the big day for the options. The futures, pretty much a light day and a light week last week. Today we saw about 5,000 contracts coming into showtime. And last week, the big day was on the 9th, about 14,400. The rest of the week was all about 7,200 contracts or less. But, before we get away from the futures, Bill, you kind of touched on it earlier. I want to go back to it. It's an ongoing discussion point / debate. What is Bitcoin outside of the is it legitimate or not question? The next question people always ask is, what is it? Is it a digital gold? Is it some type of currency approximation? Something else along those lines. Where does it really fall in? Is it completely uncorrelated? I know you've been hanging your hat a lot these days on the notion, that old debate of Bitcoin versus gold, and perhaps maybe swapping, or dare I say toggling between those two. Why don't you catch our audience up on what you've been working on over there with your Bitcoin versus gold toggle strategy, sir?
Sure. Well, I think one of the things that's motivating me and some of the strategies, because we're not, we're a separate account manager. We're not a broker dealer per se. We're just an independent, staunchly independent investment advisor, state registered advisor here in Illinois, although we have clients all over the U.S. And the thing is this, Mark, there's still some fear among traditional asset classes, especially if you are listening to Warren Buffett. All right, so Warren Buffett, one of the most successful investors they're out there, he claims, and I believe him, that the market is significantly overvalued when you look at the relationship, the ratio between the total market capitalization of the Wilshire 5000 divided by the gross domestic product. So total market cap versus GDP. We're currently at 171%. So market cap over GDP, the economic engine that is supposed to drive the stock market, we're 171% over. What does that mean? It means that if you had a house in Chicago, say there was 100 houses on a block, and all the houses were worth $100,000, and your house, you decided to put it out on the market for $171,000. What are your chances of you being able to sell it when your market is way overvalued everybody else's? Or an example, if someone were to come and knock on your door and offer you $171,000 with all the other homes on the block being worth $100,000, would you sell it? The answer is, yeah, you're darn right I would, and I would take that money, keep the balance in the bank, and buy another house on the same block. So we're trying to wrap our arms around what we believe to be an incredible asset bubble. And in my conversations with gold bugs and my conversations with Bitcoin lovers, it sounded so much like Chevy versus Ford or Dodge Charger versus Mustang. It was like we were both in the same camp, but we had nothing better to do than argue with each other. So I decided rather than doing Bitcoin or gold, as Bitcoin is the new digital gold, Bitcoin or gold, I would embrace both of those asset classes. So we've created a strategy that invests either a 100% position in GBTC, which is the exchange version of Bitcoin, and gold, GLD, which is one of the most popular alternative asset classes. And so the idea of the strategy is to either provide an allocation between one of those two asset classes, because most of the people share the same philosophy of being independent, a little bit of a libertarian view, hold your own key, hold your own gold. And so we use relative strength as a technical indicator, not the relative strength indicator per se, but again, trying to compare and decide whether or not which of those two asset classes have the most likely chance of outperforming. And so what we do is we either are 100% invested in Bitcoin or 100% invested in in GLD, and that's the strategy. And we are getting some interest in that, especially because so much of the conversation on Twitter and crypto Twitter is between Peter Schiff, Goldbug, and other Bitcoin lovers. So again, we have this conversation that goes back and forth between Bitcoin and gold, one or the other, and I say it should be both and, like one and the other. It doesn't have to be mutually exclusive of each other.
And how has that been working out so far? Because obviously, and we're going to get to it a little bit later, we have a listener question about this, the various degrees of correlation, but you kind of alluded to it yourself earlier, when all this madness hits the fan, the correlation tends to go to one across the board. I don't care if you're looking at equities or gold or Bitcoin. So how has that toggling, as you put it, back and forth between the two asset classes, how has that been working out for you guys so far?
Well, it's kind of interesting. It wasn't exactly what I expected. And again, there's limited data on what I have. I just had to go back to around 2015 to get the GBTC data. And GLD has been around for a number of years. But again, the correlation is not my primary criteria for how things are going. It seemed to me that gold was almost a safe haven for Bitcoin in the decline from 2018 down to the lows that we had, 2017 into, crypto winter in 2018 and 2019. So rather than, and gold actually has been a horrible store of value compared to the S&P 500. It's only yielded maybe 1 to 1.3% annually going back to 1980. So Bitcoin had its volatility, gold not so much. Right, we saw the market get crushed in the spring of this year. Gold hardly made a dent in terms of its negative decline. But when risk came off and risk went back into the marketplace, like we saw in March and April, gold has suffered a little bit. We've seen lower highs in gold. We've seen lower highs in silver. And even then, going back to presidential election cycles, gold and silver are usually the worst performing assets compared to the S&P 500, over that time period. So, there's a lot of different ways to look at the correlation thing. There's a lot of different ways of deciding whether or not I should be in precious metals or Bitcoin or the S&P 500, small cap versus large cap, Home Depot versus Lowe's, AMD versus NVIDIA, equal weighted versus cap weighted. There's no really one right way of doing it. It's just we all look at things with a different lens, and that's what makes a market, right? That's what makes a two-sided market. So again, we find correlation interesting, and it's still a little bit too soon to tell exactly how these two asset classes are correlated, if they are. But it certainly seems to be directly related also to the U.S. dollar selling off in the last year that we've seen. A great decline in the U.S. dollar, which has boosted all types of value-based investing.
Certainly has boosted all things out there in the Bitcoin realm as we head right on out of the Bitcoin realm and into the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe. I was just joking earlier about that Bloomberg analyst who said 1 trillion is the next resistance, quote unquote, for Bitcoin. We're not quite there yet, but it's certainly looking pretty strong out there on the market cap front. Remember, when we break down the top 10 here, take these market cap numbers with a healthy dose of salt. There's a lot of skullduggery in how these market caps are calculated, but the rankings still have some merit to them. Number 10 out there, still Cardano at about 3.2 billion. Number 9, Polkadot, closing in on 4 billion, 3.9 billion. Number 8, Binance Coin, 4 billion, a little bit north of that. Then we got Bitcoin Cash at about 4.6 billion. Number 6, Litecoin, hovering there at 4.7 billion. Number 5, number 5. Chainlink there at number 5, 4.9 billion. Number 4, our old friend XRP, still hanging out at number 4. Good for almost 13 billion, though, 12.9 billion out there. Tether, still firm at number 3. 17.8 billion. That means numero dos, of course, ETH, a little bit north of 52 billion. And the big dog, Bitcoin, at 309 billion. So it's got a ways to go before it crosses that 1T market cap level. But still, interesting stuff nonetheless. Bill, I know you're always good, at least you have been, for some interesting and or esoteric altcoin and tokens that you've been watching. I know you've been pretty busy with the big dog of late, Bitcoin, and indeed managing the equity assets. I'm not sure if you've had much time to glance over the altcoin universe of late, but if so, anything really catching your eye out there of late, sir?
Well, yeah, as a matter of fact, Mark, it's funny that you mentioned that. I don't want this to be a political rant by any means, but I do find it really interesting, the concept of a distributed and decentralized and community-governed social media platforms. For example, Twitter is thought to be censoring a lot of conservative conversation and politics. And Parler, P-A-R-L-E-R, Parler seems to be a new platform that people are flocking away from Twitter to Parler because it doesn't provide the censorship and blocking of conservative conversation and other highly disruptive talk, right? And we see people having a conversation moving away from Facebook into something called WeMe, which is considered the next generation of social network. We see Joe Rogan, who signed a deal with Spotify in May 2020 for almost $100 million. His recent interview with Alex Jones from InfoWars, right? Very, very controversial, conservative guy. And Joe apparently fact-checked every claim, everything that Alex Jones had said, and whether it was true or whether it was false. And what happened was eventually the employees of Spotify rumored to have wanted to quit, right? They threatened to quit and leave unless Spotify took down the conversation and the interview with Joe Rogan. And so we're we're hearing and seeing censorship of conversation, which is the antithesis of a free society, antithesis of a libertarian bent. And so what I find interesting, and I know this, I'm taking the long way home here, but there is a cryptocurrency called LBRY, LBRY, which is a distributed free, it's content freedom. It allows artists and musicians to post their content, YouTube videos, I shouldn't say YouTube videos, but their social media videos in a place where they get paid in a native token called LBRY, LBRY. And so it's a way of moving away from a centralized hierarchical social media platform that may or may not censor your content, may or may not permit you to publish, and it allows individual artists to be able to monetize their content with their audience, which is really what any artist really wants. And so I find the move to distributed, decentralized, censorship-resistant social media platforms like LBRY to be really, really interesting. And I think we're going to see that gain much more in popularity because people are tired of having someone tell them what they can and cannot say, even though I don't believe everything should be able to be published or posted on the internet, right? There's some material in child pornography, sex torturing, beheading, like all this stuff. There's a crazy stuff that gets posted and sent to YouTube and other social media platforms. But I'm just saying that for artists, musicians, this is really, really a cool idea.
So I like having you on, Bill. You always bring some esoteric token and or altcoin into the mix. LBRY, I like that. I'll check that one out. LBRY listeners, if you're interested in it or want to know more, hit us up. It might be a fun one. Clearly no options available on that one yet, but we like some of these altcoins. They're fascinating. They offer different viewpoints, different insight, because you're right, Bill, that is still kind of the founding ethos, the founding spirit of all things crypto right now, which is decentralized, open, unregulated for the most part, for the better and the worse. There's a good side and a bad side to all of that. The unregulated makes it hard for large institutions to trade, makes it hard for the quote-unquote regulators to actually see what's going on from a fraud perspective, but also allows a free expression out there. So a lot of interesting back and forth. And for me, one of the most fascinating things of doing this show, which is coming up on 2 years now, which is crazy to say, but in January it'll be 2 years. And just seeing the intersection of that world, the crypto world, with the quote-unquote traditional finance world, which is heavily regulated, probably the most regulated industry on the planet, and seeing how those two intersect and intermesh and sometimes bounce off each other, sometimes come together. That's been very fascinating to watch out there. Speaking of watching things, let's get out to the altcoin universe. Let's start with the big dog, the number 2 out there, which is ETH. He's had a pretty good run this week as well. Up almost 17 handles coming into the start of the show. Was at about a 462, almost 463. We were just shy of 446 on our last show there, listeners. Looking at the 30-day realized out there, it's, again, that's looking back, listeners, 30 days, how much vol has been exhibited in the ETH marketplace. That's pretty much about the same as it was last week. It's ticked up 1 point, up to 65% from 64%. Not a huge move out there. A little bit more of a move on the implied front. Again, that's going forward. What the market is predicting for future volatility over the next 30 days, listeners, that's down from 69% on our last show to 63%. So vol coming in a little bit in ETH on the implied front, but still obviously a very volatile asset class. Anything north of 60% is going to be pretty heavy out there, pretty active. Let's look really quickly here on the volume front over there on DEREBIT, clearly the number one place for ETH options. A pretty active week, not some of the crazy days out there, but we actually take it back. We did have one crazy day, 60 million on the 11th. That's a pretty active day for ETH, and then 47 million on the 13th. So a couple of active days. We saw more than that on our previous show, closing on 70 million back on the 6th, but still pretty close out there. So the 11th was pretty active, and 13th pretty active as well. Overall OI, similar trend to what we saw in Bitcoin. It kind of peaked about a week or so ago, north of 600 million here, and has come off a little bit below it now, down to about 550 million or so. So OI still looking strong, looking firm out there in ETH land. Ripple, of course, a good old XRP, had a nice little run up there since our last show. At the end of our last show, it was pretty much at about 25 cents even. Now coming into start of today's show was threatening 29, 28.7. So good little run for the XRP fans out there. Maybe it'll break back into the top 3 and oust Tether out there. We shall see. But a good run threatening 30 cents as opposed to threatening 20 in the wrong direction. And rounding out our top, not so much top 5 anymore. These have kind of moved around a little bit now. They used to be the clear top 5 here. Bitcoin Cash down almost 14 handles, 13.62 from our last show. And Bitcoin SV down about 42 cents from our last show. Now it's time for you guys to take the reins. It is time for the crypto question segment.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, welcome to the crypto questions. You guys know the drill. Send in your questions at options, most of the major social media platforms, or via our live chat if you want to get bumped up to the top of the list. We usually go live with this show around 2 p.m. Central on Monday. Sometimes that time bumps around a little bit depending on everyone's schedules out there. Usually around 2 p.m. and, of course, after the fact on any major podcast platform out there. Let's kick it off here. Macy Mac wants to know, what should I be looking for outside of ETH and Bitcoin when looking for the next big crypto options hit? You know, we've had similar questions along this vein a number of times. Seem like they're coming in hot and heavy over the last few months. People are expecting, the next big pop to happen out there, apparently. Obviously, ETH and Bitcoin, the big dogs, the clear number 1 and number 2. We don't really see any enormous options market growing, really swirling yet for some of these other ones out there. That said, as Bill alluded to earlier, we've had guests in the past come on very recently who've just been endlessly fascinated with all things DeFi. So if I had to wager on maybe not a particular, coin or token itself, but maybe more an area of the marketplace where it seems like we're poised for the next big hit, it would be something in that DeFi realm, which is, of course, puts it in that ETH category out there, but still a fascinating area to watch. And that's kind of where I'm looking for the next big, as you put it, quote unquote, crypto options hit. Bill, do you concur with that? Or maybe it sounds like maybe you think this LBRY is the next big hit. What do you think here for Macy Mac? What do you think we should be looking for the next big crypto options hit, sir?
Well, it's not a recommendation or suggestion to buy, the ones that we're talking about, especially LBRY. I mean, remember, Bitcoin is ranked number 1 with a market cap of $310 billion, and LBRY has a market cap of around 11 million. So it ranks 467 out of 500 cryptocurrencies. So it's not the token that I talk about as terms of a financial gain. I just find the concept and the philosophy very, very interesting. And so really, you have to kind of go back old school. Like there are some investors would say, well, I only want to invest in the Dow 30 stocks, or I want to invest in the top 50 of the S&P 500 stocks. I would say that looking at the top 10, top 20 in terms of market cap, your cryptocurrencies, that would be a safer way to play it. Because, remember, Mark, back during the .com when that bubble burst in, 01 and the lows were put into 03, Google had IPO'd, I'm not exactly sure, maybe in the late 90s, early 2000s. And who thought that we needed another search engine? We had Ask Jeeves, AltaVista, Dogpile, which I think is still around. Nobody thought we needed another internet company. We needed a hole in the head. So I suspect what's going to happen is a cryptocurrency will appear. It will be the next big thing. It will be the next Apple, the next Amazon, the next Google, the next Netflix. And no one's going to be in it because we're not going to want to be, or we think that it's the same as something else, right? And then that's going to be the one that's going to take off. So I don't mean to be a complete pessimist about the whole thing, but just keeping an eye on market cap. We're probably going to be a cryptocurrency that not everyone is alerted to in these conversations that will slowly gain market adoption and use, have this beautiful recycling of you need to use the token in order to be on the platform, and you have to sell the token in order to get out of the platform, and things like that. This kind of beautiful life cycle, right? This beautiful evolution that kind of works with all the elements within the cryptocurrency. And so there are some that you're going to hear about, and others like Polkadot. When did that come on? When did that come on my radar until recently? I barely heard of that one. So again, you just have to probably keep your eyes open to the top 10 or top 20 and just watch these things percolate up and then fall down before you make an investment decision, knowing that you have the possibility of losing 100% of your stake.
Yeah, Polkadot, the hot one there, number 9 now, Bill. So you got to keep watching the ever-evolving top 10 to see what the latest hot thing is out there. Speaking of hot things, we touched on this a few times here on the show today. We have a question from JLC. JLC wants to know any updated thoughts on Bitcoin correlation. Yeah, we touched on this in the past. It's been a few months now since we've touched on it. We looked at it, I think, for some listener questions we had back a while ago on the show. We broke it down some interesting terms. We use a platform we use quite a bit for our TWIFO, This Week in Futures Options program that we do every week over there with CME. Check it out if you haven't, listeners, every Thursday, because it has a great cross-asset correlation tool on there. I encourage you, you can go to cmegroup.com/TWIFO or /TWIO. That will give you our This Week in Options reports there, and if you like that, you can upgrade to a more full-featured suite there, and that will give you access to these a little bit more advanced tools, including the cross-asset correlation. But Bill, as you know, this topic, this talking point of what is Bitcoin, what does it fall into, what bucket can we put it in, where does it correlate to, has been an endlessly fascinating one. We touched on it a number of times. We did a very recent one. We did looking back at the longest run we have for data over there, which, of course, these are the futures on CME and based off that CME Bitcoin reference rate. So we can only go back as far as about a couple of years for when those futures launched. So we did that already. I encourage you to go back, look at some of our earlier episodes to look at that longest running correlation. I wanted to give you an updated look at where it stands for this year, because this year is a very tumultuous year. You know, this is a year where the correlation really kind of matters, where it really makes sense. As we were talking earlier in the show, when things get crazy, correlation tends to go to 1. This is when you have the diversification in your portfolio for years like this. So this is the year that it matters. So I went back and dialed back the analysis machine. So just looking at it purely year to date, from the January 1st till now, how does the cross-asset correlation stack up? And let's see what numbers we got. Let's go out to the ags realm. As you might imagine, ags, not exactly huge correlation with Bitcoin. The most correlated asset class was soybeans at about 22%. So not a huge correlation there, but some. Out to the metals, which is where Bill has been hanging his hat of late, and certainly a product category that is often conflated or talked about synonymously with Bitcoin. Gold, you can maybe see why. Gold, so far this year at least, has had about exactly a 40% correlation to Bitcoin. Silver, actually a little bit higher, 41%. So maybe you need to do the gold silver, or I should say the Bitcoin silver taco there, Bill. Copper, metal has a different use case than gold and silver. That's a much lower correlation at about 25%. Let's move on out to energy. Energy's made a lot of headlines so far this year. Pretty strong correlation with WTI and Bitcoin, about 30%, but even higher for RBOB. Which is about 39%. If you don't know what RBOB is, head on over to cmegroup.com. Check it out in the energy category there on more of the refined petroleum products out there. Let's go out to equities, Lance, another category everyone wants to know. How do equities compare? And if I buy Bitcoin and let's say the S&P, am I uncorrelated? What's going on? Well, so far for 2020, the answer is yeah, you're pretty firmly correlated. The S&P is at about a 41%. NASDAQ, actually 43%, so a little bit higher correlation there in terms of NASDAQ. The other complexes, people often think of it because they call it Bitcoin. They conflate Bitcoin and the FX realm, the currencies. Let's look there. Not a lot of correlation there. The highest is the dollar pound with about 25%. So something that's got coin in the name, not a huge correlation to FX. Same deal on the rates front, not a huge correlation. In fact, it's negative out there to the rates, and the largest correlation was with the euro dollar, about negative 17%. So that's our update there. Who asked for that? JLC. That's our update on how correlation stands right now for the year of our Lord 2020, which is, as we all know, an outlier there by just about every description. But Bill, I'm curious, you're obviously out there playing in the gold versus Bitcoin realm. Does any of this surprise you? Have any thoughts on these correlation numbers we're seeing so far for 2020, sir?
No, and I listen, Mark, I really thank you for publishing these and talking about it, because I think it's exciting and it's interesting statistics. But again, for me, Bitcoin, my favorite Marvel comic character is Mystique, because she can, create and mimic the appearance of any person, with their voice or with their appearance, and they do it with perfection. Bitcoin is going to be like Mystique, where sometimes it's going to be like a commodity, sometimes it's going to act like gold, sometimes it will act like the U.S. dollar, right? So the correlation's interesting. But I think you will, and my next comment I think you will agree with, and it is when we were on the trading floor, we would trade, Dell versus Apple, the S&P 500 versus the S&P 100. We would do a pairs trade with Home Depot versus Lowe's, Coke versus Pepsi. There are strategies where you're using the Russell 2000 versus the QQQ, right? The NDX futures contract, and we do it, on a dollar weighted basis. And so even in those mature products, when the stuff hits the fan and these things go crazy and the correlations go to 1, and all of a sudden your pairs trade blows up on you 3-1 in your short 3 and long 1, contract, things get ugly really, really fast. Or whether it's the U.S. Treasury versus the 10-year. So I like correlations. I find them interesting, but I absolutely, under no circumstances, do I really bet the ranch on correlations, not only maintaining their relationship, but just remembering how ugly it can get when they decouple, because it is a flight to quality. It is a liquidity crisis. It's you are buying your shorts in at the market and selling it to long. It's when risk managers have only a little bit of time to close out contracts and limit risk, and they will buy and sell any asset class. It doesn't matter. It's at the market, and it's the client, right? It's the customer that bears the financial devastation from that. I get it. I see it. I know why it's done. It could be done with a little bit more savvy experience. But I tell you, when things become uncoupled, like we saw in the beginning of this year, and maybe what we're going to see again in 2 more years, or who knows, correlations, man, just throw them out the window. It's just in this space, they don't matter to me.
I expect many things from you, Bill. I did not expect you to get out into the X-Men Mystique realm, sir. So well done for that.
I am well versed.
You surprised me.
Esoteric.
On that front there, Mr. Bill. Unfortunately, that music means we come to the end of another epic journey through the world of all things Bitcoin. We talked Bitcoin versus gold, Bitcoin versus, Mystique. Who's your favorite X-Man/villain to compare and conflate crypto to? Let us know. I'm sure you guys will have no shortage of opinions on that. But before we go, Mr. Bill, if folks are intrigued, maybe they want to reach out to you to discuss your Bitcoin gold toggle strategy, or maybe more straight up old school long equities type approach, or maybe correlation, any of the other things we talked about, maybe their favorite X-Man/villain. Where should they go? What should they do, Bill?
Always visit the website at cenaclecapital.com, www.cenacle with a C, cenaclecapital.com. Or they can, all our contact information is on the website. I posted just the basics of the strategy on the website under the strategies menu selection, along with some very old school, very traditional, 60, 40, 70, 30 strategies, value versus growth strategies. And we have a get a dividend check per month strategy for my clients that are, 55 plus, looking for more income. Because again, there's this big conversation going on between value versus growth as an asset class, and we're beginning to see value really show strength versus the growth component. And we think, we might be in for a little bit of a value run here, so we'll see.
So if you want to reach out to Mr. Bill, cenaclecapital.com. That's CENACLE over there.com, listeners. You also give him a follow, easy for me to say, over there on the old Twitters as well, just at Cenacle Capital, all one word. And on behalf of Mr. Bill and his favorite X-Man, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in your questions. Keep them coming. Remember, if you like what you hear, keep those reviews coming in your platform of choice. Stay tuned throughout the week. A lot of great content coming at you. Got good old Jack of Market Wizards fame, Mr. Schwager out there. He's going to be joining us on the interview show tomorrow. Should be fun. Then, of course, we've got Options Education Wednesday with Options Bootcamp, Options Playbook Radio, hitting you a double dose on Wednesday. Thursday, back with This Week in Futures Options and episode number 2 of the Option Block. Friday, of course, back with Volatility Views. Then it all kicks off again on Monday with another episode of the Crypto Rundown.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or Search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.